that we are seeing in terms of what's happening with the small and the mid-cap space. But with that, let's welcome in the management for today, and that's Rajesh Bhatia, Group President and CFO of Uflex Limited, joining us. Hello and welcome to the show, Mr. Bhatia. First of all, just want
Hello,
to
ma'am.
hello, and first of all, wish you a very happy Independence Day as well. Just want to start off.
Wish you the same.
Thank you. So we just want to start off with by asking about your assessment of the first quarter numbers and even overall volumes. If you've seen about an uptick over here, but what's the outlook towards FY26 that we are looking at for volume growth?
So I think we had said that FY26 Q1 we had about close to about 8% volume growth and about 6.5% value growth, what we witness on a year-on-year basis. And for the full year, we had earlier guided that we look at about a 10% revenue growth. So I think we will because some of the investments that we had planned that will come in available to us from April onwards haven't been so, especially the aseptic packaging facility in India, that expansion. So I think we've grown at 6.5% in the first quarter. Let's see for the rest of it, but as of now, we'll stick at about 10% revenue growth.
So when it comes to the guidance, post the Q4 number, you had given a revenue guidance of 10% and EBITDA margin guidance of 12.5% to 13%. On both fronts, your numbers have come in slightly below compared to what the guidance was. Are you confident enough that you'll be able to make up for these numbers in the remaining part of the 9 months?
I think if I look at on a revenue side, we'll have to grow at 11% for the 9 months. So looks a bit challenging given that the projects that we thought would get commissioned are still a little far away. So we'll have to really, dwell on increasing the capacity utilization from our existing businesses. Also, our investment in the, PET chips resin facility in Egypt. Those numbers are not being added on to the revenue because ultimately, though we achieved in the first quarter of operations more than 70% capacity utilization in that business. But, it's not adding to top line because at a consolidated level, it's all getting knocked off. So, and aseptic packaging hasn't still been commissioned. So looks a bit challenging, but nevertheless, we'll stick at 10% growth. The EBITDA this quarter came at about 12%. The Q1 EBITDA, we're talking about the normalized EBITDA without any FX gains or losses. And we had said that about 12.5%. I think the upside in the India packaging films business, what we've seen post May, I think we will achieve about 12.5% EBITDA margin for the year as a whole, for sure.
Okay, so just a follow-up on what you said about the capacity utilization levels being around 74% or so in Europe, in Egypt is what you said. When can we expect the incremental revenues from this particular PET chips that we are looking at? Along with that, if you can give us in terms of outlook for India as well, the expansion plans over here. So give us a broader outlook in terms of where the capacity expansion plans are and when can we see those incremental revenues flowing from the company?
So we have 4 ongoing projects right now. One is the aseptic packaging expansion from 7 billion packs to 12 billion packs at Sanand in India. Then we have a 12 billion packs greenfield capacity coming up at Egypt. The third is the WPP capacity at Mexico. And the fourth is our, recycling, PET recycle, which is mandated by EPR in India. I think we had looked at that, they'll come anywhere, somewhere between H2 and probably between December and March. But, within FY26 for sure, we'll have them. There is a bit of, ambiguity as to whether we'll achieve portion of that in H2 in terms of revenue and profitability. Else we'll have to shift our guidance to FY27 for incremental revenue as well as the the EBITDA coming from these projects. These 4 projects have a potential to add about 3,000 to 3,500 crore of the top line, and about a 12-13% EBITDA margin levels. What our industry is, they're likely to throw away between 500 to 560 crores of
So,
EBITDA margin.
so just on that part, can you just reiterate what's the kind of growth that we are looking from FY27-28 onwards, and this is with what kind of a margin profile that we are seeing?
So we are seeing that the blended overall margin, because will remain between 12.5 to 13%. The top line growth of about 3,000 will come in FY27. So if we close this year, let's say at about 16,500 odd crores, or 3,000 crores from there would be close to about 18%, 17-18% growth in FY27.
Right. Sir, I believe more than 50% of your revenue comes from international market. If you could just give us an idea, how much of revenue do you get from US? And I believe that your products are under some treaty, so they won't get impacted because of this tariffs. But given the fact that you are a significant stakeholder in this industry, you might be having some idea of what has been the impact on other peer group companies. Are there any order cancellations? What are you hearing on that front?
I think, like we have our substantial exports from other territories into USA, which are covered, which are from Mexico, and we are well protected under the USMCA as of now. But yes, there are exports from India as well and other territories as well. Now, given that we are present in all, multi countries and all that, so that gives us the advantage if we can move, like Egypt, say, has the lowest tariff as of now, what we've seen, 10% into US. So if we were earlier, exporting into US from some other territories where the tariff is higher, so we'll use the Egypt facility to export to US. I'm just saying, that those possibilities exist because of our multi-locational manufacturing capabilities. And we'll see. I think this is still a moving story. Our next 6 months will really determine as to what we do. We do have some exports from India to US as well, which are not very substantial, but we'll have to look at them also as to what sort of impact will it have on our margins or on our volumes.
Right.
But a very large part of our exports into US are well protected under US.
Right, sir. Just one final question from my side. Given the fact that you have a large part of exports going to the US market, not from India but from your other regions, just one thing I wanted to understand, what are your customers telling you? What is their strategy now? For other players, if there is a tariff that has been implemented, will they pass it on? What is this on-ground check that is suggesting you, sir?
I think what we likely see is that, to begin with, when US imposed 10% reciprocal tariff on everybody, they were easily could be passed on to the customers. So very easily, but a 25% kind of a tariff and all that, what happens on that? India is today looking at a 50%, which eventually, if the things go well, may come down to 15 to 20. So I think those are the numbers which can be easily passed on. So we don't see much impact of any tariff between 15 to 20% range. But obviously, a 50% tariff will call for a different set of negotiations with the customers, and are to expect that they'll take 50%.
Okay, thank you so much, Mr. Bharia, for joining in and sharing your perspective on UFlex Limited for going forward for not just FY26 but 27 as well. So that was the management of UFlex. Stock currently down about 0.8% or